So things are starting to calm down in the market a little bit. So the question is, are we in the eye of the storm and we've got the next wave coming through? Or is the storm starting to pass? Stick with me as we get into the details. My name is Brian Cannon and welcome to Markets in 5. So I'm going to go through two charts today. I'm going to keep it kind of simple. But the first one here is just an update of the S&P 500. During the last Markets in 5, I really talked about this potential falling wedge and the fact that if it breaks it to the upside, that could be good. That could be a potential turning point. And so we actually did get that break to the upside. So, eye of the storm, things are calming down a little bit. And so we're moving forward in a relatively good pace. We've taken out this short-term resistance. So now that short-term resistance becomes support. So what I would anticipate with this break here is, and we've got it, by the way, if you see the two candlesticks up to here, up to this dotted blue line, it came up, kissed that. Now that has been some resistance and support in the past, so we're watching that closely. But I would anticipate that to be a short-term kind of hiccup, if you will. But it's not uncommon once you break a resistance level, it then again becomes support. So I would anticipate this coming back down, following this blue arrow back down to support, and then assuming that support holds, then I would assume that we would take off, and then we would find resistance up here at the 100-day moving average, which is the pink line, and then eventually this next red dotted support line or resistance line up there. So which would put us around call it 4,200. Or pretty close to it. So that's what I'm seeing right now. So again, we are playing this, and we have put a fair amount of risk back on, and we'll continue to look for opportunities in doing that as well. Now, if this support right here cannot be held up and it breaks back down, then that tells me we've got more downside to go and we haven't quite bottomed. So these next couple of trading weeks are going to be very important, and will kind of give us the direction on what we should do. But if we come down here and hold this, it's a good buy time to put more risk back onto the portfolio. All right, eye of the storm. So again, the first chart we just went through is fairly positive. We've gotten some breakouts, and there's some potential upside from here. This is potentially the sign of the backside of the wave. Now, I've shown this yield curve inversion several times on Markets in 5, but I did update the chart to include a recession. So I wanted to point out the last two recessions in the most recent decade or so, a couple decades, and so the yield curve inversion. I just wanted to kind of point this out. From the point of inversion, basically the market here in the pink, the S&P actually did okay, right? And that yield curve inversion lasted, anywhere from a year to maybe a year and a half. And then once the yield, curve improved and started to head back up, that's when it seems like the market really started to fall apart. And then after that is the recession. So, from the point of inversion to the actual recession, again, can be sometimes a year and a half, a couple of years. And so, again, we're not going to be out of this thing for a while. But again, there may be a year, maybe a year and a half that the market, continues to perform okay. Now, if we go into a recession, the market more than likely will fall down further, and based on the fact that we have an inverted yield curve right now tells me that there is another wave coming. We just don't know when. We don't know how long it'll last. Will it be a short recession? Will it be an elongated recession? What will the stock market do? The stock market's already taken I guess what's different this time is the market's already come down a good bit as this yield curve has inverted. So that's a little bit different than the last two inversions. So every pull down is a little bit different. Every bear market's different. So again, we're not officially in a quote unquote recession yet, but looks like it's coming. We just don't know when. So as you can see, the storm is that we've gotten the first wave through, right? I think we're definitely in the eye of the storm. Things have calmed down a good bit. We're starting to see some positive short-term momentum. But with the yield curve inversion and the fact that can lag for a little bit, could be the back half of the wave, back half of the storm that we're expecting down the road. So, but at the end of the day, we have to play the cards that are dealt to us at this game right now. So we've definitely put some risk back on, and at some point we'll just pull it back off if necessary. So, but if you have any questions, give me a shout, and I look forward to seeing you on the next Markets in 5.